Well, welcome back to my channel. Today we're going to go over the Venice token, ticker symbol VVV. It's a cryptocurrency, and this cryptocurrency is very interesting because Bitcoin has been in a downtrend, but while Bitcoin was going down, Venice was going up. So essentially, Venice is had a bull run while Bitcoin was going down. So please keep in mind, I am an amateur trader. I prefer to do long-term positional trades. I have a day job, so please don't consider anything I do the best sound financial advice. I'm just trying to show you what I'm seeing in the charts and maybe help you make a decision or maybe to learn something new about charting. So let's start off. So with this particular crypto coin, it has been in a bull run for 5 months since December 2025, and it is now, of course, May 2026. And as you can see, it had this really huge move up, and we're looking at the monthly chart, and it's had a 2,121% return since December 2025. What I am most concerned about this is a worrying time for me because uh, in the past, before I really got into trading, I would probably be in about here. And what I mean by that is that I become exit liquidity for people who have been in this particular asset a longer time because it's had quite the run. So let me go over what I'm seeing in the charts and hopefully give you, if you're not already invested in Venice token, maybe this is a token that is worth maybe investing in. However, now might not be the best time to do it. So let me go over that. So concern number one, we have here the 8 period moving average on the monthly chart, and as you can tell, price is really far from that moving average. When the price moves really far from the moving average, it is due for a retracement, which essentially means that the price is going to start coming down because it wants to get closer to the moving average. This, keep in mind, is a very short moving average. So that means that even on a short moving average, it's just exploded way above the moving average. It can't keep up. So now let's move over to the 2 week. The actually I'll probably go to the weekly chart here. Okay, and as you can tell, this is the same dip at the bottom, and we on the weekly side has started a nice what I call railroad track formation. This is where this is your 8 period moving average, your 20 moving average, and this is actually the 40. But if you are more of a classic stock trader, you can use the 50. But as you can see, you have a railroad track where it's like going up and up and up and up. Okay, so from a weekly perspective, price is closer to the moving averages. So this position is high, but it's not extraordinary high on the 8. However, I want you to look at the distance between the price and the 20. The 20 is a very important moving average. Uh, when price gets that far away from the 20, that's usually a sign that it's due for a retracement. Okay? All right, and then we can take it down further to the daily, and I'm just going to have to scrunch this up a little bit. And so this is back in December, and as you can tell, about January 2026, it had a little bit of a pause. Okay, it made a lower low, went down, and then boom, it started its railroad track formation, and the 8 has been kind of weaving and weaving. But I'm going to take the 8 off, and what I want you to see here is the how the price sticks to the 20. Okay, the reason why this stock has done so well and is because look at how it stuck to the 20. yes, it sometimes gets high. It comes back to 20, catches it, goes high. The 20 catches it, and so forth. That is actually a great. That's a great thing to see because uh, essentially what that means is that unless you can, unless you are the type of person that can sit in the computer desk all day, I wouldn't have even at these peaks and I saw that price was going up. I wouldn't have gotten out of the stock. I just wouldn't have because the the 20 is rising. When the 20 is rising like this at a vertical angle, it has its highest support uh, and and resistance levels. And obviously, you're more on the support side. See how it catches it, catches it, catches it. Now, when you see these little dips below the 20, that's fine. You can think of the 20 moving average, and really this is really any moving average as a zone. Okay, the best way. So it doesn't have to exactly stay on the line. Is what I'm trying to say. All right, I'm going to remove this right here. Okay, so this is a healthy formation. Now let's go back and put the 8 moving average on. But you're starting to see an interesting point in this moving average. Okay, I mean in this particular product. All right, and this is what concerns me. That we may have hit the top of VVV or Venice Beach Token. Okay, I am looking at the 2 week chart of the same token. However, I've got some different indicators on. I have the parabolic relative strength index, the stochastic RSI, the money flow index, and all of these indicators are saying we're overbought, which is essentially means they don't think there's a lot more upside to this particular currency. See, your RSI went and hit 85, extremely overbought. Your stochastic RSI has made a cross down. The blue has crossed the red, which is a bearish signal. It's starting to essentially head down. And then you've got the money flow index. It is in way overbought bought territory. This measures price versus volume and looks at buying and selling. And essentially, as you can see, it's starting to cross down, which is normal. If you're a human, if you were in it since here, you want to take profits. That's a lot of profits. You also on the 2 week chart, you're starting to see it do its downward slide. But if we go to the weekly chart, it's it's more confirmed that it thinks that the price has reached its peak. So here is, as you can tell, there is no real bearish divergence or anything. It's just going down. The stochastic RSI is starting. It hasn't confirmed yet, but it is crossing the 80. It's at the red is at 86, but the blue line's at 73. If this confirms on Sunday, um, or actually, yeah, I think it's Sunday. Then then you know it's on its way down. Now, just because now, how far will it go down? Well, that's a good question. If we go back to our moving averages, we are in a situation where we are at the 20 moving average. You could see the price of the of this particular asset go down to here, which is the 50 moving average. But here's the key. If the 50 moving average fails, is kind of curving and fails to catch uh, the asset, then that means it's for sure going to try to go down to the 200 moving average. Okay? Does that so if for some reason the price goes under the 50 moving average, is it a sure thing it's going to hit the 200? No, it's not. It's not a sure thing. Uh, but what you're going to want to look for is if the price uh, goes below the 50, then what's also going to happen is these moving averages are going to start crossing. The first one that is the first moving average to cross is going to be the 8 over the 20. And then if the 50 can't hold the price, then the 20 is going to start crossing over the 50. And then if the 50 can't hold the price, you would see a 100 moving average around here somewhere. However, in this particular case, you would start to see the 50 inch towards the 200 moving average for a possible death cross. But that death cross may not happen. That's too far out in the future. You can't predict the markets totally. All my point is that be careful because uh, standard indicators to measure overbought and oversold, they're saying this particular token is way overbought and it needs a cool down. Now, it can definitely, it does that cool down mean that it has to totally come back to this low of 35? No. Sometimes you will see with particular assets is they'll come down and maybe kind of bounce up and go up again. That could happen, and we can wait to look for that. But if you are interested in investing in this token, wait for the bounce. You're in a bad place to get into this token because it's just going to go down, and you have no idea whether it's going to go all the way down or if it's just going to go like halfway down. And same thing with this particular stochastic RSI on this weekly. It could go down like this and never reset under the 20. Same thing with the money flow. It could go down somewhere like this and then start coming back up. We don't know, but but everything is saying that there's not much more upside to this particular coin. And what I mean by that is in the future this coin could definitely go higher, but in the short term, say at least 2 or 3 months, it's going to be it's starting to low. It's starting to go down. Now, if we look at the MACD, it's a slower reactor. This particular MACD is slightly different in that it divides the MACD by the average true range. And as you can see, this is the best sell range, and we have exceeded the this box here. And what that means is that even it doesn't think even it doesn't think that it has much more upside. So this moving average, as you can tell, it hasn't quite crossed down yet, but it's starting to collapse. You will probably see on the MACD, and you're seeing this on the histogram, it wants to come back down and cross down on this. Now, will it actually fully cross down? Will this histogram go down to zero? I don't know. But if you're new to investing and you're excited about this token, I would say keep the excitement. However, now is probably not the time to get into it. So that's all I have for today. I hope God blesses you in your endeavors and stay cheerful. And there's always another opportunity to trade on another asset. Thank you.